Okay. So on to some normal videos that I normally do here. The Economic Collapse blog, Michael Snyder, interesting article. Keep talking about these big tech companies, big money, multi-billion dollars worth, and none of these freaking things are profitable. Haven't made a profit yet. It's unbelievable, isn't it? House of Cards. Netflix is one of the poster children for tech bubble burst 2.0. How can a company, again, when I read this stuff, this is how insane the market is, thanks to the Federal Reserve. They are directly responsible for all this nonsense that I read you every day. They are directly responsible for this insanity that I read you. How can a company that is going to generate $2 billion in negative free cash flow in 2017 be worth $70 billion? Netflix has soared in popularity in recent years, but so have their financial losses. Just like during the original tech bubble, investors are ignoring basic fundamentals and are greatly rewarding firms that are bleeding giant mountains of cash year after year just because they are trendy tech companies. I guess, yeah, that's like, saying Enron, that's thing's not even a real company. It's going to crash. Oh, no, it's not. It's fine. It's worth billions. Invest in it. It's good. It's fine. It'll be okay. But somewhere along the line, you actually have to quit losing money if you're going to survive. Just ask Tech Bubble 1.0 victims, Pets.com, Webvan, and eToys.com. The investors that poured enormous amounts of money into those companies ended up losing everything. And similar tragedies will play out as Tech Bubble 2.0 bursts. So far in 2017, the S&P 500 is up about 8%. But the what they call the FANG stocks, such as Facebook, Amazon, Netflix, and Google, are up a whopping 30%. But at least Facebook, Amazon, and Google are making money. Netflix is not. So why in the world has the stock shot up by more than 30% so far this year? It just doesn't make any sense at all. According to CNBC, during the first quarter, Netflix had $423 million in negative free cash flow. And for the entire year, it is being projected that it will have $2 billion in negative free cash flow. The California-based company is now dumping cash into original content to maintain its dominance over its growing field of rivals. The company had $423 million negative free cash flow during the quarter, wider than the $261 million negative cash flow a year ago. Netflix expects to have $2 billion in negative free cash flow this year. You know what? Oh, Netflix stocks rally on that news. Boy, that's good. I thought it was buy the rumor, sell the news. What the hell's going on here, right? The bleeding of cash at Netflix only seems to be accelerating. The number for the first quarter of 2017 was 62% worse than the number for the first quarter of 2016, and it was more than twice as bad as the number for the first quarter of 2015. It is hard to imagine that Netflix will ever become more popular than it is right now. So if Netflix is not making a profit at this point, when will it ever make a profit? Similar things can be said about Twitter. This is a company that has never made a yearly profit, and that is actually starting to see revenues decline. But somehow the stock just continues to go up. Since the last time I wrote about Twitter, the market cap has shot up another $1.5 billion. At this point, the market values Twitter at $13 billion, but in the entire history of the company, it has actually lost $2 billion. What we are witnessing is a modern-day version of tulip mania. See, people want to talk about cryptos. That's the tulip mania. These things are digital currencies that don't even really have a value, but somehow they're trading for enormous amounts of US dollars, and that's a tulip bubble, except the bubble keeps getting bigger and bigger and bigger, and each time someone says, oh, it's going to pop, it doesn't pop. It goes, sure, there's a pullback, doesn't pop, goes back up to meet new highs. Oh, bubble territory, it's going to pop. Nope, little downfall, back up again, new record highs. It is insane. But what's more insane is this. These companies are losing money, and people are just investors throw more money at it. Throw more money at down a hole. At least with Bitcoin and these cryptos, we're not throwing it down a black hole. These things are going up in value, and the world's catching on that these are an alternative way to save your livelihood financially. China's downgrade up, devalue. This country devalue. South American countries devalue. And those people are realizing, man, if I had one of these cryptos, I'd be making an absolute killing right now. Well, I'll tell you what, don't do that. Don't bother with that. Go invest in the American Stock Exchange, the one that's rigged. And just when you need your money, you know what happened? Market crash, it was closed, you couldn't get your money out in time, sorry. So anyways, what we are witnessing is a modern day version of tulip mania, and at some point this irrational euphoria will come to a sudden end. In fact, there are already some signs that Tech Bubble 2.0 may be in a significant amount of trouble. The following is an excerpt from a Bloomberg article entitled, "Investors Go All In on Tech Giants." The tech-powered rally has catapulted the sector to a price-to-earnings ratio of 24.4, or 41% above the 10-year average. But as Google and Amazon stretch to nearly $1,000 a share, not everyone is comfortable with the valuations. Investors pulled more than $716 million from the most popular technology exchange-traded fund last week, the $17.4 billion Technology Select Sector SPDR Fund, or XLK, its largest weekly outflow in over a year. Most everybody remembers 2000, the year. So they might be getting a little nervous with this development. I just wonder how many people have said to themselves, if Amazon gets to 1,000, I'm going to take at least some profits. All over the financial world, prominent voices are warning that the enormous financial bubbles that we see all around us are not sustainable and that a major crisis is headed our way. I wrote about some of these voices yesterday, and today we can add Paul Singer to the list, which again I already covered what he said. But there's a little excerpt here. I'm going to read it. Given groupthink and the determination of policymakers to do whatever it takes to prevent the next market crash, we think the low volatility levitation magic act of stocks and bonds will exist until the disenchanting moment when it does not. And then all hell will break loose. Don't ask us what hell looks like. A lamentable scenario that will nevertheless present opportunities that are likely to be both extraordinary and ephemeral. The only way to take advantage of those opportunities is to have ready access to capital. So take your profits now, sit on the sidelines and wait. Is what he's saying. When the financial markets collapse, Donald Trump will likely get most of the blame. But Donald Trump did not create the stock market bubble, and he will not be responsible for ending it either. Since the Federal Reserve was created in 1913, we have seen this same story play out over and over again. There have been 18 distinct recessions or depressions since the Fed was established, and the more the Fed interferes in the marketplace, the larger the booms and busts tend to be. And it could be argued that this time around the Fed has manipulated financial markets more than ever before. Interest rates were pushed as low as possible, and trillions of dollars were pumped into the financial system during the Fed's quantitative easing programs. Of course, those actions were going to create a huge bubble, and of course that bubble is going to inevitably burst. Unfortunately, this is not just a game. Real people with real hopes and dreams are going to be absolutely devastated. Millions of Americans that were carefully saving for retirement are going to be financially crippled, and pension funds all over the nation are going to be wiped out. I don't know why we can't seem to learn from history, and I'm not talking about events that happened decades ago. The buildup of this coming crisis is so similar to what we just witnessed before the crashes of 2000 and 2008, but we just keep getting fooled over and over again. But once things fall apart this time, I think that the American people will finally be fed up. I think that they will be sick and tired of an unelected, unaccountable central bank that creates endless booms and busts, and I think that they will finally be ready to push Congress to shut the Federal Reserve down for good. And I'm here to tell you that would be one of the best things you could ever do. It is always everything that happens is based on what the Fed has done. So why do we have them? Why do we have this entity that gets to set interest rates and give all its banker friends? You know, during the bailout and the TARP fund days, did you know, and I did a video on this a long time ago, okay? They gave Morgan Stanley, the two top executives, like the CFO or COO, whatever, and the CEO, their girlfriends, or I think it was their wives, a multi-million dollar loan directly from the Fed, in which turn they took it and invested in student loan type debt that can never be bankrupted on. And it was actually set up, if I recall, going off my memory, I think I'm right here. It was set up, heads they win, tails you lose. If the bet somehow turns sour, it's got some kind of backing that they'll get their money. If they make profits, they keep the profits. So since when does the Fed give someone's, little venture partnership over here some money? I remember covering that. I remember talking about it. But for you, the little guy, piss off. We want you to get in the market so we can ream you. No thanks. We learned our lesson. Guess where we're going? Precious metals, we've always been there. So we're going to continue stacking those. But we found this new interesting thing called cryptocurrency. And you guys don't control it. And it's going crazy. And I'd rather take all my money out of your stock market and dump it right into there. No matter how good you try to make your stock market look. Because I don't trust you. You have a track record of absolute failure. It's only a matter of time before these things are destroyed. And you will be at fault. Speaking of the Federal Reserve. So anyways, on to the next video. Take care.